Even while I'm on vacation in Maine, I thought it was important to share a message. Why you can still consider being a home buyer in this market. Rising home prices, not interest rates, should be keeping you in the buying and selling market. Sure, rates are up, and absolutely an increase of a half or a point or even a full point on an interest rate matters to the monthly payment. But if we really break this down and we think about people saying that they're going to wait to buy, not the right answer. The reality is our housing markets are appreciating by well over the historical 4%, and in the West Coast, it's still in the teens anyhow, year over year. And there's no sign right now that it's even going to slow into next year or two. Hello, my name's Selland. I'm with Signet Mortgage, and in this message, let's talk about why you should be buying in this home market and how it works out. Let's just say someone decides they want to wait to see if rates will drop in the next year before they buy a house. And let's say they were planning on purchasing $1 million house. If they decide to wait to 2023 to buy that $1 million house, it's very likely that house next year is $1.1 million. So now we're talking about a $100,000 increase in purchase price that far outweighs the increase in interest rates. If you bought that $1 million home with an $800,000 loan, the incremental cost of a 1% increase in rate is about $526. Waiting and borrowing the extra $100,000 at 6% will cost $599, something to consider. The media wants you to scare everybody and talk about rising interest rates. And the matter of fact is, yes, interest rates have gone up for home loans. Those rates were low because of the global pandemic and having the Fed active in buying mortgage-backed securities and driving down rates, not a housing shortage. If you are in the market for a house, you need to look for a house. You can always change your loan rates when rates drop, but you can't go back and buy a home at a lower price when prices are going up. We really don't have any expectation that prices will drop, particularly in the West. The bottom line is we have a housing shortage. In fact, Business Insider in May said the housing inventory continues to fall short of the $1.5 million homes, a number of homes that needed to meet historical high demand. Just imagine if you had a chance to go back and buy a home during the 80s when rates were in 13 percentage points. You'd still do it, right? Because you know that house would be what it would be worth today. People need houses to live in, raise a family, and to build equity. The good thing is that you're purchasing at today's prices, 2022 prices, and maybe the interest rate is higher. But then you can go back and potentially refinance in a year or two downstream if the interest rates do drop and still be under the 2022 price for that house and have earned appreciation over the next year or 2 years. So we've set the story straight. It's scary, I get it, but possibly the right thing to do. Home loan interest rates are up, but interest rates go up and down throughout time. However, what does it really cost to wait if you wait another year to buy? When you look at that risk, it's a far greater risk than rising home loan rates. Hopefully this helps you get a few ideas and thoughts to stay in the market. Now may be the perfect time to buy your home, and we're here to help. This is Selland with Signet Mortgage, and if there's anything we can do to help you or anyone you know to buy, sell, or refinance, please don't hesitate to contact us. The information's below. My email's clay@signetmortgage.com. We'd be happy to help and look forward to it. Thanks so much. Bye-bye.